I like the silver and the gold and all the stories behind them and the monetary purposes thereof. But when it gets down to it, the way the system's going, the amount of gold and silver you have are going to be pretty much meaningless if you do not fit into the social credit system like the Chinese. So you could be a multimillionaire and not buy a candy bar because the system has said, we control how you could spend your own money. I'm looking for like 40 or so in 2025. It's really hard to predict because technically there's no resistance above 35 or so. So it has nothing holding it back from stale longs that want to sell because the price reached where they bought it. But it could go, could go to 50. I really doubt it.
Silver has captured the attention of investors in 2024 as the precious metal has delivered stellar returns, rising over 40% year-to-date and breaking above the key $30 per ounce level for the first time in over a decade. Crucially, silver is benefiting from a very positive supply-demand backdrop, with the market facing deepening deficits as industrial offtake surges while mine supply remains constrained. Renowned precious metals expert DavidMorgan predicts a major silver price surge by 2026. Reflecting on past trends, Morgan recalled the strong performance of silver and gold for 11 consecutive years, before undergoing a much longer correction than anticipated. The secular bull market in precious metals has barely started. When gold begins to outperform the 60-40 portfolio and stock market in earnest, gold and precious metals will have moved beyond the ground floor. From a technical perspective, Morgan describes the speculative frenzy of 2011 as driven by retail investors and funds, with silver soaring parabolically. Despite skepticism from peers expecting $100 silver, his prediction held true. The metal reached a record high of $49.45 per ounce in 1980, following geopolitical tensions and inflation concerns. It peaked again near $49 in 2011 during a period of financial crisis and high market uncertainty. However, silver has rarely sustained prices above $30 in the last 2 decades, reflecting its abundant supply and fluctuating demand. Meanwhile, Morgan warns that social credit systems could render gold and silver meaningless despite their monetary value. Rising inflation erodes the purchasing power of fiat currencies, making gold an attractive hedge. The current U.S. inflation rate of approximately 3.5% is projected to increase further as Trump's fiscal agenda unfolds, setting the stage for continued growth in gold demand. Now, we present the clips of DavidMorgan's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Long term, I think silver is probably one of the best things you can do on a legacy investment if you're willing to wait, a decade or so. But I think we may get a blow off top in 2026 or so. We could get there and then come down and consolidate like we did for these 10 years, 12 years. Gold got, as you know, you were early on in the investment community, and we saw silver and gold do so well for 11 years straight. And then, I don't know about you, I won't speak for you, but as for me, I thought we had a 2-year correction at most, and it was like a 12-year correction. Anyway, that's what I think. I think we're going to get a big move up in the next few years, and then we'll have to wait and see. Yeah, there was a spike, parabolic move in 2011, and I forget what the breakout, I know what the breakout point for the whole move was because I did a futures trade. I had people that were on my paid service that retired early. It broke out at 19. It went from 19 to 26. So when you're leveraged, that's a lot of money. And then I sold at 26, and then QE2 was announced. And most of the silver bugs and a lot of the financial people said, holy moly, they're printing more. Silver's going to run. So I jumped right back in. So I got 19 to 26, got out, got back in at 26, and rode it all the way to the top at 48. I called it like 2 days before the exact top. I don't always do that. And but it was just a feeding frenzy. Basically, the banks had kind of stepped aside and let the markets determine, the rest of the market determine what the price would be. So you had, smaller entities buying, retail, of course, funds, all kinds of things. And I was getting like 3 times the subscription rate that I'd ever gotten the whole time. And I said, this isn't going to last long. I think this is it. Just a side note, when I made that call, this is it, it lasted like 2 more days. Some of my peer group, I won't name names, said, you are so messed up. This is going to $100. You're going to look like an absolute fool. You're going to lose all of your credibility. What the heck are you doing? You better take back that call right now. You really muffed it. Well, I was right. I like the silver and the gold and all the stories behind them and the monetary purposes thereof. But when it gets down to it, the way the system's going, the amount of gold and silver you have are going to be pretty much meaningless if you do not fit into the social credit system like the Chinese. So you could be a multimillionaire and not buy a candy bar because the system has said, we control how you could spend your own money.
DavidMorgan explained that gold, recognized as a Tier 1 asset akin to U.S. Treasuries, serves as a monetary hitching post for banks and wealth managers. He pointed out that as food prices rise and purchasing power falls, awareness of monetary issues spreads, turning gold into a fear trade for preserving value. Highlighting the potential for less regulation, Morgan saw benefits for the mining industry in gold. With debt as a share of GDP set to break record highs in the coming years, the Treasury Department has to sell more bonds to investors who may demand higher yields. When yields rise, the price of bonds on the secondary market falls. That has helped weaken the historical correlation between bond yields and gold prices. While lower rates are still bullish for gold, which doesn't pay interest or dividends, higher rates don't necessarily put pressure on bullion anymore, Bank of America said, maintaining a gold price target of $3,000 per ounce. According to Morgan, ISO 20022 is a key global financial mandate shaping systems like BRICS and SWIFT. He emphasizes that CBDCs could improve efficiency but eliminate privacy, with all transactions traceable. Let's get back to the interview.
Uncertainty. I mean, the banks know it. The banks, don't really publicize it, but it is as Dines used to say, the monetary hitching post of the universe. It's a Tier 1 asset. It's as good as any security. It's as good as a U.S. Treasury. And it's kind of a fallback position for the banks. And that spills over into, the more astute money managers or wealth managers and that type of thing, family offices, and it just goes down the scale all the way. And then eventually it gets to the public because of, shows like this, people are more aware of monetary problems. General public will catch on as well. Food prices keep going up. I can't afford, I'm getting paid enough, but I'm not able to. The value of that money isn't as good as it used to be. I can't buy the groceries I used to, et cetera, et cetera. So that's what happens. So it goes down the scale from top to bottom. And just at the end, the run to gold's almost everybody because of really, I hate to use the word, but it's a fear trade. They're afraid that their money is going to lose so much value that they better spend it now rather than save it. I think it'll be less regulation. I think it'll be better for the mining industry. I think on balance it'll be good for gold. And I do think that it's not going to be what some people expect, meaning that, this committee with Vivek and Musk and even Ron Paul's involved, I understand, they can cut back a great deal of the government. A lot of the bureaucracy will be filled by AI. But if they did every, let's say, bloat in the government and put it on a computerized system, that's still only 20% of the budget. 80% of the budget can't be taken away. Military and Medicare, Medicaid, and Social Security. So with 20%, if you do the math, that comes out where we're just about even on tax receipts to budget with a slight deficit. So from my perspective as a math guy, I don't see where you're going to get out of a very perhaps best case scenario, very low to maybe no deficit at all. So I hope I'm wrong. Maybe I'm overlooking something. That's a broad brush view. Things could change, could be different than I stated, but doing the basics, that's what it comes out. I do try to analyze things from the top down, the biggest picture, and then narrow it down. And the big picture is this ISO 20022, which is an edict that's been signed by everybody that says we're going to have this financial system based on this mandate. And that accounts for both the BRICS and the SWIFT system. Everything exists and everything is going to exist. So if it goes to full-on CBDC, everybody clears through that set of rules. So I think the BRICS is important, and I think that it could mitigate them from the dollar somewhat. But the bottom line is the top tier is going to control things. And that's really what my speech was about, because it took it pretty much to the very top, which is the BIS, the Bank of International Settlements, and it's the bankers' banks, and all of them adhere to their mandate. And they've already done studies, they've done test cases, they've already got, speed, efficiency, lower costs. There's a lot of benefits to it, but there's also the downside. You have no anonymity, you have no privacy. But they put up ruse and say, well, yeah, privacy, because what we're going to do is on small transactions, we won't trace you, but on large ones, we will. Well, come on. They could trace every transaction. I made a joke during my speech. If I eat a candy bar, it's too small a purchase for them to trace until I buy too many candy bars. And then they'll say, hey, you're borderline diabetic, David. You can't buy any more candy, no matter how much money I have.
Currently, silver trades around $32 per ounce. For it to hit $100, its value would need to triple. This seems unlikely without extreme economic shifts. Silver's abundance, competition from other metals, and the dominance of traditional investments make this milestone a distant possibility. As we witness the evolution of financial systems and the growing influence of precious metals, Morgan's insights highlight the potential and risks investors must consider. Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.